Hey guys, this is Black Bolt. Hope everybody is doing well. In today's video, I'm going to be talking about the $7,500 tax credit that we get for EVs in the United States. And before we start, I wanted to give a quick update on my buyback. As of now, I've submitted all of the documents. I ended up needing to resubmit pretty much everything that I submitted towards the beginning of the process. My buyback is approved, but I do not yet have an amount or an official offer, and the repurchase agent that I'm working with let me know that it was going to be about 10 business days from last Friday, I believe it was. Either towards the end of this coming week or very early in the following week, I should have my buyback done. So I'll keep you posted on that process. Follow up from the last video where I did the quick impressions on the VW ID4. So two things came up about that. Yes, I am aware that VW uses LG Chem for their batteries, and I do have some doubts about that, obviously. And I'm not even sure that it's a car that I would want to buy if I had the cash for it. The other thing that came up was the $7,500 federal EV credit. The EV credit is a tax credit that offsets taxes that you owe to the federal government. So not state, just federal. And the way that it works is, if you make, say, $150,000 of taxable income, so that's after your deductions and everything, and you end up owing Uncle Sam, let's call it $20,000 in taxes, you would have $7,500 removed from your taxes, so you'd owe $13,500. Now, if you're a normal person and you make, let's call it $60,000 of taxable income, so you're grossing around 90. And yes, I know that's high, but it's not that high for a couple. So if you're a couple and you're grossing around 90 and you have $60,000 to $70,000 of taxable income, and you have kids, what's going to happen is you're going to have a lot of deductions in there, and you're going to pay probably less than $7,500 in federal taxes if you do your taxes right, like hire an accountant. If you end up owing the federal government, let's call it $6,000 in taxes, then you are going to get $6,000 taken off of your taxes, so you'll owe $0 in taxes. The way that my family makes income, a lot of our income is this 1099 income, which has a lot of write-offs, and then we have a mortgage, and we itemize our taxes, we itemize our deductions, so that ends up being a lot more than the standard deduction for a couple. So we pay less than $7,500 in federal taxes every year. I'll just say it that way and leave it at that. If we were to buy a car like, say, a Nissan Leaf that has a $7,500 tax credit, we would get $0 of that tax credit. We would just pay the full retail price. So that is something that I do not like about the way that tax credit is set up. It's basically a tax credit for high income earners, and it subsidizes the automakers for making basically expensive cars. So this came out of a conversation that I was having with Matthew 1970, and then I was having a conversation with someone else earlier today, and I apologize for not remembering your username right now. But we were talking about how after Chevrolet used up all of their tax credit in 2020, they magically reduced the prices of the Chevy Bolt EV and the Chevy Bolt EUV, so that basically you're paying the same as you would if you were getting the tax credit. So I think that the credit subsidizes the automakers more than they are intended to subsidize people who buy the cars. And then something else that came up that I was thinking about is the way that car companies handle the tax credit. A company like VW or Nissan, they're probably not going to have a bunch of super high earners purchasing their cars. With Tesla, it was an easier formula. If all of your customers make $200,000-$300,000, they get the credit. But with Nissan, hasn't yet hit their $7,500 limit, which I was surprised by. General Motors and Tesla are the only two car companies that are no longer... I should have turned at that last light. General Motors and Tesla are the only two companies that don't qualify for the tax credit. All of the other manufacturers in the United States for full EV qualify for all $7,500, but the way that they deal with it is different. So Nissan requires you to go out and get that tax credit by yourself regardless of how you buy the car. And I'm gonna do that. So if I was to go and buy a Nissan Leaf, S Plus starts at around $30,000. I would have to pay the whole $30,000 and then pursue the difference through taxes. So I would have to try and get that $7,500 through taxes to bring that car down to around $24,000, which is pretty affordable for the typical family. But like I mentioned earlier, the typical family is not going to qualify for that $7,500 tax credit if you hire a tax person to help you reduce your taxable income legally. It's built into the tax code. Don't pay any more taxes than you need to. The way that VW was handling their lease agreements is if I want to get an ID4 Pro, which costs $40,000, the capitalized cost of the VW lease is going to be just about $32,000. So that's going to reduce the lease payments, and it's also the residual value, I believe is what it's called, is the amount that you'd buy the car for at the end of the lease, is going to be 50-ish% of the MSRP. It's going to cost around $20,000 to buy the car outright, and then you're going to make $12,000 to $13,000 in lease payments. So when I was talking about the leasing situation earlier, for me it would be a situation where I get the lease, make all of the lease payments up front, so all $12,000 or $13,000 of it, and then the $20,000 buyout I could also do immediately. Those are two of the different ways that Nissan and Volkswagen are handling the $7,500 tax credit. Nissan doesn't deduct it from the price of the car regardless of how you buy it. VW deducts it from the price of a lease so that you pay $32,000. If you want to buy it with cash or buy it with a traditional loan, then you're still going to need to pay $40,000 and then pursue the tax credit on your own, which, as I've mentioned, is a more expensive way for the typical family. I don't know how the other car companies are handling it. Hyundai still qualifies. Basically, all of the other manufacturers outside of Tesla and General Motors that sell electric vehicles in the United States still have their full tax credit. So you just need to go on the company's website or go talk to a dealer about how they capitalize the lease. Because if you are going to be buying a brand new EV and you want that $7,500 credit and you don't have really high taxable income, then you're going to need to structure it in a way that minimizes the cost of the car, and that is almost certainly going to be through a lease. And then you just have to make sure that your total lease payments aren't out of control, that they're not sticking hidden fees and whatnot in the lease to make the car more expensive than you think it should be. So anyway, that's just my thoughts on the EV tax credit. Let me know if you have any comments or questions, or if there's anything that I missed below. And then really grateful for all of you guys. We are now over 800 subscribers, so if 200 of you subscribe, we'll be able to monetize the channel and split that revenue with Google instead of them hogging it all. Have a good day.